Welcome back to the Global Business Report on Rise News. Fuel prices in Tanzania have hit a new record high, with the Energy and Water Utilities Regulatory Authority attributing about 93% of the latest price changes to rising world oil market prices and about 4% to premiums. In May, petrol was up to 3,148 Tanzanian shillings, 10% higher than where it was in April. Diesel was up 21%, kerosene up 16%, double digits there. Over in Uganda won't introduce fuel subsidies even after pump prices spiked following supply disruptions, partly caused by Russia's invasion of Ukraine. Subsidies and lowering the cost of fuel tax would cost government much needed revenue and increase the need to borrow, according to Moses Kagwa, who's an acting director at the Ministry of Finance, who said that in the capital, Kampala. The Treasury receives about $1,450 shillings from every litre of gasoline. To Kenya. Kenya plans to go ahead with the Eurobond sale at a time when rates are rising. The government still intends to raise $1 billion before the end of June, according to Treasury Secretary Ukora Yatani. He was speaking to reporters in Nairobi. His remarks came days after his department expressed concern in a document that rising global yields meant borrowing might be too expensive at this time. Kenya's economy grew by 7.5% in 2021 compared to a contraction of 0.3% in 2020, according to the Kenya National Bureau of Statistics. It says the KNBS said that the growth was boosted by recovery from the effects of COVID-19 pandemic. Economic activities registered positive growth, except agriculture, which shrunk by 0.3%. Standout there, accommodation and food services, 52.5% growth. Education was up by 21.4%. Joining us to discuss further, Kevin Ngigie, who is an equities and fixed income analyst with Genghis Investment Bank. Kevin, good afternoon to you. Thank you so much for joining us. What do you make of the economic rebound from 2020 to 2021?
Thank you very much for having me, Rota. So indeed, it's a good signal going forward, especially now that we're approaching our general elections, and we expect to see a slump in economic activity. So yes, last year we eased up some of our COVID restrictions, and that's why you can be able to see stuff like accommodation and food services. You know, your drive-throughs were open some 24 hours a day. Your Airbnbs were operating fully. People were able to travel. So all these things just helped in buffering that bounce in economic activity. But then again, if we look at agriculture, we saw a slump in agriculture, and that's predominantly one because of global constraints in the prices of goods and services, and we were unable to export some of our foodstuffs. If you check our numbers, you'll notice that 60% of our foreign exchange currency comes from agricultural produce. So that was one of the reasons why you saw a slump in agriculture. Couple that with the fact that we've had one of the worst droughts in the country, with almost 3.5 million people going without a meal, and some of our dams are really drying up. So those are some of the challenges that the agricultural sector in Kenya has faced. The recovery from the lockdowns has really helped in buffering up our economy. So food and accommodation and food services sector were some of the ones that registered some of the best growth. Our drive-through were open, some of them 24 hours a day. People were able to travel about and book all these rooms and hotels around the country. So that was a big boost in helping that particular part of the economy.
For 2022, I think the elections are in August or so. Any worries that, I guess, that could disrupt the growth trajectory for the economy this year?
For sure, there are inherent risks to it. It's only three months, maybe in a week to the elections. It predominantly looks like a two-horse race. There's no clear favorite. Both of them have been people who've been in the government for decades and more. So either one who takes the economy is well capable of delivering. But now the challenge that we're going to see is, of course, foreign direct investments has really gone low. There's no much development activity in the country right now. Everyone is just gearing up for the election. So we're going to see sort of an economic slump. Companies are not really investing. Companies are not hiring towards this election. And we expect to foresee these in the months after the election, depending on how the election turnout would be.
The Eurobond, the decision to go ahead with raising $1 billion, even with rates where they are. Does that underscore how badly the fiscal situation is?
It does. It's really bad. If you look at the second half of last month, April, you'll realize that in the span of just a week, from around April 20th to April 27th, yields, for instance, hear me?
Yes, I can hear you. Go right ahead.
Oh, sorry. Yields, if you look at our 7-year paper, you'll notice that they shot from around 7.18 to almost 8.58, more than 100 basis points. If you look at the same story on the 10-year and the 24-year papers. So it's a really tough time for Kenya to go into the market. The market sentiment out there, of course, coupled with foreigners' flight to safety, and also the fact that we are heading to an election. If you remember, we had a dollar shortage in the country. So the credit sentiment from investors out there is really at its lowest point it could be. I think these are some of the lowest points we've seen our Eurobond since listing on 2014 in the London and Irish stock market. So Kenya is in between a rock and a hard place, and I believe they'll just have to do what they need to do. So let's see where the rates will be next month. For sure, it won't be at a comfortable place, but I don't foresee them raising another Eurobond as they promised in the rest of the year.
All right, and with Tanzania facing these, I just want to move to Tanzania now. Double-digit growth in petrol, kerosene, fuel, petrol, kerosene, and diesel. I mean, what do you make of that situation? Should they be? They definitely can't look at subsidies at this point, right?
I believe they will not make the same mistakes Kenya made with the subsidies. Most of these countries in the East are really corrupt, for lack of a better word. So I don't think the government will make that mistake to go the subsidy way, and will just let the markets play out themselves. But Tanzania has really hurt. If you look at the price of petrol over the last 2 or 3 months, has shot up by 20%. That of diesel even worse, at almost 20% cumulatively. So I think they'll just let the markets play out, and there'll be a price discovery in the market, and they wouldn't interfere. The only thing the government could look to do, considering this is almost a socialist state, is just relook at their fees and levies and just try to bring them off to offset some of these costs.
Okay, so yeah, thank you. That was my next question. So if these prices we're looking at now on the screen, if they continue to climb, so the only option they have is to reduce the levies on fuel.
Correct. And those prices you're looking at, I mean, those are just for, if you look at them, they're only for almost a month. If you're taking cumulatively from around March to April, you'll realize that diesel has shot up almost 40%.
Wow.
Kerosene, petrol almost 20%. So it's really bad down there. And Tanzania I think, is one of the most socialist states in the East. So I think one of the things the government could look up to is reducing just the levies and taxes. But then that's a double-edged sword, because you remove or you lower those levies from that area, and where do you recover them from? And you really need this hard currency. So It's really a challenging time in the country.
Wow. Okay. And so I guess Uganda's decision not to pay fuel subsidies, then I mean, you would agree with that, right?
Uganda is also a different dynamic. If you look at Uganda, one of the reasons also why the prices have really rocketed, other than the exogenous factors, is they also increased some of the levies, like the excise taxes by Uganda, 100 Uganda shillings. So Uganda is looking for revenues wherever they can get it, and they're raising them at the worst possible time, when the global prices for crude are really shooting up. So Uganda, there's been debates, and I think there are now rallies for people calling for these prices to be relooked downwards. So also the only thing they could do is try and bring those levies and excess taxes lower, but I don't see that happening, considering that they've just increased by another 100 Uganda shillings. So it's a challenge out there, but I don't see the government has no fiscal or financial means to bring in a subsidy.
Gosh, it's really fascinating stuff when you look at everything. Even here in Western Africa, we're going through the same thing, Nigeria, Ghana, so on and so forth. It's really, really tough out there. But thank you so much for joining us to discuss this. Kevin Ngigie, Equities Fixed Income Analyst with Genghis Investment Bank. Appreciate your insights.